News. Let's talk money market rates here in Nigeria. The June savings bond offer, the latest from the debt management office, which closes tomorrow, June 7th. So you still got a day to get a hold of it. There we are. 2-year savings bond due June 12, 2026, 17.14%. The 3-year due June 12, 2027, 18.41. And you can see at the bottom of your screen there, closing date is tomorrow. Settlement date is the 12th. Coupon pay dates, those are the 4 out there. Now, we can also see a trajectory of the rates. We decided to put this together looking at, since it's half year. So you can see the 2-year, climbing all the way up. Same thing with the 3-year. So 2-year from 11.03% all the way to 17.41. 3-year from 12.03 to 18.41 as well. So that's higher rates of return. Also, Treasury bill auction that took place open market operation. This is OMO auction, actually. So this, of course, the subscriptions, under subscription for the 105, and same story for the 189, but then we saw an oversubscription for the 357, and the rates, from 18.74 up to 22.33. And then you can take a look at the a day later, the June 5th Treasury bill auction there. Similar story, just with the 182, the only one there being undersubscribed. The rest are oversubscribed. Look at the 179 billion offer, 677 billion. Rates just coming down just a tad, but you look at the true yield, that's still up there. So, of course, who better to discuss money market, fixed income than Ajibola Tobi-Osho, of course, financial market specialist. Thank you so much for being with us. Good morning to you.
Good morning.
I guess, starting with the savings bond offer, what do you make of, the trajectory of rates that we've seen since the beginning of the year?
Well, that's in line with what has happened across all securities in the market, saying even Treasury bills and bonds. That's how we are seeing it rise across the half year. So it's in line, it's in strategy of what we expect. 600 basis points is not far-fetched. And also the volume in that space has really grew significantly, like 3x what it used to be. I checked the report on what the amount allotted was in January compared to what it was for May. About maybe 1.7 billion was allotted in January, but now we are seeing up to 5.9 billion in May. So that's a lot of volume too. So it means that a lot of people are becoming more aware of this market, and also they are taking a cue and investing in it. So it's good yield, it's good investment for people that don't have so much money to play in the bigger market. So everybody can enjoy the new interest rate environment that is being attractive, and it's a good one. I expect that to continue. We don't see that to taper down like in this auction or in the next. So they will continue to invest and put interest rate around that level, and people can pick up good yield for that.
Fantastic.
Level.
So we're playing around with a scenario of like a 5 million investment.
Yeah.
Can you speak to the ability to be able to create recurring income from the coupon payments if you invest in subsequent bonds?
So if you go back to the screen where we showed the savings bond, we saw the coupon fixing for September, December, I think, then January and June,
right.
And that's largely how they're fixing. September, December, March, and June. Yeah. So that's how they usually do for the savings bond. So that means for every of those months, you receive a coupon, which you can use for. It's all about planning your savings. Yeah. By the time you invest, you then know what month you have lacking, what month don't you have coupon to be received on, so that you can set a new savings towards that month, and that can be used to fund your recurrent expenditures to whatever it is you have. So it's all about doing your math, right? Say for instance, if you invest 5 million naira. At 18%, you do the math divided by 4. Then you know that in months, September, December, March, June, you're going to receive this amount. You can even set it for your rent, towards buying a car, school fees, and stuff like that. So it's a good one for you to plan your life. It's more stable. You know you're going to get the coupon. It's more like you're keeping part of your rent or part of your salary aside for you to. More like salary that you can fix towards a particular expenditure. So I think it's a good one to arrange for.
I think you've already said this. So I was going to ask you the trajectory of rates. You see rates continue to stay up where they are.
If you look at it, really, it's a bit tricky, to be honest. It's a bit tricky. If you compare the OMO result to the NTB results, you would see about 200 basis point difference. 20.67 for the 1 year, and about 22.33 for the OMO.
Yeah.
I mean, a lot of people cannot participate in the OMO market, right?
Right.
It's not for the public, it's for FPIs and the banks, and then NTBs for every other person. However, what I expect is that the federal government will continually be in the market for now. I mean, thinking about where the fact that they have to do supplementary budgets and stuff like that, that means they need a lot of money, so they'll be in the market for now. And there's how far they can pull on maintaining rate for.
Yeah.
If they continue to need money, then they have to give more for lending the money. So I would expect that they will try to fight it in order to keep their cost, but at some point, the market will then resist, and then they will have to raise at whatever level the market is ready to raise at.
The OMO auction that we saw in the week, I guess, as far as the subscription is concerned, there didn't seem to be much, demand for at least the earlier papers, except for the 354. So, what's your takeaway from the subscription result?
So let me just give you a quick scenario so you can mirror it in your mind.
Yeah.
If I have to invest for 182 days, my real investment horizon is 182 days.
Yeah.
I can take a risk and invest for 1 year.
Okay.
And enjoy that yield of 22 points, whatever percent.
Right.
Wait for a time decay. Time decay meaning that 364 days that I owed would eventually, time will go down on it and it will become 182 days. And then I can sell at, maybe the market level will now be at 19% or 18% or 20%. So I'll be making money on both sides, on the interest rate side and on the capital gain side.
Right.
Do you understand?
Yeah.
So we have a lot of investors that play that kind of game. That's why you see that most times they shun the 182 days and 91 days, because most people are more interested in buying in 1 year and then allow time decay, allow them to then exit when they want to buy, and making capital gain. It's a risk. What if by the time it becomes 182 days, yield has gone really high in the market, and it's a risk they are always ready to take, because most of the time it's likely that you make good capital gain than make a capital loss.
Okay.
So that's what you get to see when they invest that way.
And then I guess the 357-day paper, that 22, I think was, if we put it up, 22.33 or so.
Yeah.
That rate's, it's in line with what you said with respect to...
Yes, please. Please. There's a bit of, let's say, the monetary policy side, they are the ones that handle the OMO. And if you remember the last MPC, they raised interest rate also. And that should be a bit reflective in how they'll be issuing instruments in the market. So yes, it's a bit reflective. It has to show, if I'm raising MPR rate by 125 basis points, then your treasury bills too should be a bit reflective. For the NTB, that's strictly federal government. It's not managed by the monetary policy. It's federal government. But I'm sure they really want them to come in line, and so that all the market rates are at the same level. But but it's still a game of demand and supply.
Right.
If the people going to the auction are not bidding as high as 22%, then I will not force them to, because as the government, my own target is to ensure that I keep my cost, my interest expense as low as possible. So there's a bit of, would I say...
strategy?
Around that. Eventually, like I said, the federal government is in the market for a long time to borrow, given that there's a lot of government, the budget supplement that they're doing and all. We don't know how they intend to raise that year. We don't know if they're going to tap into the Eurobond market or the local denominated bond that they plan to do. We have not seen that yet.
Yeah.
But whichever way, as long as they continue to come to the local market to raise, they would then have to give more for whatever it is they want to collect.
So with back to the T-bills though, and this is for more for the public and so on and so forth. You've already said that, and we've talked a lot about these rates in the past. What do you make? Okay, so I guess you kind of should have probably already answered this. The difference between the prior rates, and it's not that much because the 91 is the same. So that's still government trying to manage its costs.
Exactly. If you see the amount on offer was about 179, and they ensured that they sold exactly. They just sold slightly higher than that.
Yeah.
If they wanted to raise as much as 677, that means they would have had to sell at as high as 25%.
Right.
They could have choose to raise maybe half of it or more than half and then sell at 21.5% or so. But they're just signaling that we're not there yet. We don't intend to raise it yet. But like I said, they can resist for long. However, the market too has a significant to pay in it. Because looking at these bills now in the secondary market today, they are not doing so well. There are a lot of people that go to speculate with the intention of coming to secondary market to sell lower so that they can make free money. Yeah. But if you continue to do that and you stop making free money, then that means speculation activity will go down at the auction, and this will give rise to rates going up. Yeah. So It's a two-way thing. They can continue to push, but to what extent? Then by the time people start going higher and then they continue to bid higher, they might have to give way at some point. Yeah. So for now, you might continue to see. I mean, next week auction too. I don't expect it to do so well. I mean, I don't expect it to go so high because the amount on offer is about 49 billion or 50 billion. That's so small.
Right.
I think they could. I'm sure a customer can even buy all that. So with that size on offer, I would expect that too would be, I mean, properly bidded for. I mean, they should be able to get away with maintaining rates, but if the market too resists very well, then they can.
I think,
they even choose to raise higher, then rates might have to go high.
It makes, I mean, with what you said and broken down for us, it makes the whole play very interesting because now you get to see the push-pull between both parties.
It's a proper push-pull between demand and supply. Demand and supply, demand and supply. Am I ready to? And another thing is that for OMO, right, there's a bit of more love for NTB than OMO. And the reason is because anybody can play in the NTB market, regardless, as in whether you're federal government, whether you're the bank, whether you're FPI, whether you're state government, anybody can play in it. But for OMO, it's being restrictive. It's just for the FPIs and banks.
Yeah.
So even the FPIs would rather hold NTB, more of NTB. Not like they will do a mix, right? But they want to have NTB too. So in the case where they need to sell bill, there's no restriction. It's OMO, I cannot buy. I can only buy NTB. You get to see that a lot. So that difference is always reflected in the price because of the restrictive nature of the OMO versus and NTB. Yes, please.
You see, this is why we have you on the show to break these things down. So speaking to individuals now, and we've already talked about how attractive the federal government savings bonds are. If you are rejigging your portfolio for the second half of the year, it's June, Christmas is coming up at the end of the year, and so on, school fees, blah 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 blah. Are you more biased towards fixed income money markets, versus equities? How would you look towards the second half of the year to put money in all these instruments?
I mean, equities have not been doing so well.
Yeah.
I mean, they're expected to get all the bashing. Once fixed income market rates are high in fixed income market, most times you get to see a lot of people dump equities, right? So I'm not so skewed towards equities at the moment. But for money market versus fixed, I'll still say it's a 30-70 thing. Okay. I mean, in a very high interest rate environment, you cannot shun the long end of the curve because that's even a good time for you to lock in, so that by the time the yield curve reverse, I mean, the normal yield curve is short end it should go upwards. But when you start seeing a downward slope, that's the time for you to readjust yourself, look at your portfolio, and then start putting a good number too at the long end, knowing that by the time that yield curve reverse, you have already locked in yield at very good level for longer time. So that's what people have been doing from time to time. Like even with the DMO, you've noticed that they've stopped issuing very, very long bonds because they too cannot afford to pay those kind of high coupon for that long. So it's a mix, right? Just try and mix your portfolio. I mean, yes, you can get attracted to all those 25%, 27% yield on the money market instrument, but that shouldn't allow you shun the long end of the curve to do a perfect mix for your portfolio. That the long end, I mean the short end to boost your portfolio, and also the long end to lock in yield for longer time. I mean, so that you're able to earn yield for a longer period of time. So it's never to be shunned. In your conversation, do you find the number of people talking about saving? I mean, I know all the talk is minimum wage, fuel subsidies, and all these things. But do you find people wanting to try and save and invest at this point? Or is it survival? I want to eat. So you have survival, and you have people too that still want to save even for survival. I mean, in their head, they're thinking, if I can put that money down and earn my survival means from it too, it makes sense. It works. Thank you. And this is the point I try to tell people with the recurring. Exactly. If I can put in that, if I can just close my eyes and put in that money down and then getting my survival funds from it, that works too. But the problem is, if you have not saved up so much over a number of time, that might be difficult. But that's why we say savings bond takes as low as 5,000, 10,000. Anything counts. We understand that the environment is the economy is very, very tough right now, but any little thing that you get to put in all this investment, you would feel bad by the time the market reverse and then you start coming down. What we then think is that I didn't take advantage of any of this high yield, because to be honest, the people that are balling right now are people that have cash to invest. Imagine you're investing R1 billion in 25%. What are you saying? and taking care of you for the rest of the year.
Exactly.
So those are the people balling right
Yeah,
now, and
yeah.
you can be part of it. I mean, you don't have to have up to ₦1 billion. I'm just giving you that hypothetical so you can see it on the, and
Exactly.
I mean in the bigger picture
Yeah.
and all. So you don't have to. You can also save your survival mode from it and eat the coupon as your survival means. That's what it is. And at the end of the day, you still have your huge sum, your invested amount there.
And it's
for
safe.
you. And it's safe. Yeah, it is. It is.
Ajibola Tobi-Osho, it is always a pleasure talking fixed income money markets with you on the show. Thank you so much for taking the time to come and talk to us.
Thank
Appreciate
you.
the time.